you very much for that. Vinay Jaising is now joining us. He's Managing Director and Head of Portfolio Management Services at JM Financial Services. Vinay, good afternoon. Good to have you with us here. Thank you very much for joining us. AMCs, right? I mean, lesser, I think out of everything in the capital market space, maybe the least spoken about sector. We speak about exchanges all the time because I guess there's only one, and stocks done so well. Brokers occasionally, yes, but AMCs is kind of not a cool, is not seen as a cool space. Do you own any, and what are your thoughts here?
So we've been nibbling in, a couple of AMCs, but the thought is pretty simple. If India is witnessing a $35 billion equity inflow from DIIs from April 1st, which implies in 6 months you've added as much as you have ever added in a year as a whole. So the inflows to the equity market is fantastic from DIIs. You add to that, between 11 and 25%, the market, the larger cap have moved by 11 to 12%. The smaller caps have moved between 25 and 30%. So you add to that the mark-to-market amount to the AMCs. So they've had a fantastic 6 months. The entire basket would have grown far more than what you and I would have estimated 6 months ago. It was difficult to decipher either the inflows or the quality of movement in the market this year as well as less. So the base is a lot more higher. Where we are pondering on to the point for the AMCs, and especially the larger cap, is when global AMCs are available at half the valuation, how long is this liquidity growth rally going to last? And if the answer is long enough, then these stocks augur a very serious look.
Hi Vinay, good afternoon. Good to see you in. What about stock exchanges?
As far as stock exchanges are concerned, there's one and one unlisted one. So as far as stock exchanges are concerned, I think you've seen the good run for BSE happened. Now, the story of what's happening in the option market and how the volumes come off, are seeming to be correcting, which means basically if, let's say, earlier analyst Pooja had an EPS for FY26 for, let's say, a BSE at somewhere close to 102 to 104. That number has to correct down by 5 to 2%, and the stocks had a healthy run. So technically, we are not buying more of the exchanges currently and looking at opportunities to probably trim down some of them.
Vinay, afternoon, Rima here. There are two key concerns which are emerging for India, according to you. One of them is slowdown in the credit growth rate, and two, earnings downgrades for the near term on account of lower consumption. So how are you positioning your portfolio for this eventuality, possible eventuality?
Sure, thank you. So first is we are underweight the financial sector because we're seeing a slowdown on the credit growth rate. Second, we are underweight in IT, again for the same reason. Having said that, what we're looking at is what do we buy where we can see growth? The first space where we are going overweight is the pharmaceutical space, where we've gone overweight substantially. The second is industrials and cap goods. So these two spaces are where we are putting our, our longer term bets on, and we're taking it out from, the financial and the IT and maybe a little bit of the consumption space as well. So that's how we are weighing ourselves. By putting more weight on the pharmaceutical space, we're also playing the Make in India story because lots of the pharmaceutical companies we like are, CDMOs, not just for domestic, but also looking at global markets. So, we are taking the pie of what if the dollar were to appreciate into that basket as well.
Vinay, we have this IPO that's going to be opening up in the next few days from the Vare Group. And suddenly this renewable energy space is getting a lot of attention. There are various ways to play it. Solar modules, solar cells as well. We had Premier Energy that listed, in fact, blockbuster listing over there. How are you all approaching this theme? You had an SME company that went up 100 times, I think, in the last 3-4 years. And they as well raised some money. So how do you all play this theme? Power as well as energy, renewable energy mix.
Exactly. So in the capital goods and industrial part, virtually half our weightage is in the power sector because we think India is, net deficit power. You're going to see as much as the capacity power has today coming up in the next 5 years, and about 70 to 80% of that, maybe 350 odd gigawatts would be coming up in, or maybe 400 would be coming up in clean energy. So for us, there are companies like Tata Power, NTPC, which give you both the plays. If you look at simple companies like Tata Power, at one end, people think it's a generating company, it's a coal, hydel generating company. But if you see the incremental capacity which Tata Power is getting, it's largely in clean energy. Second, technically, Tata Power today has more capacity in solar modules and cells than even Premier Energy. If you were to put the valuation of a Premier Energy into Tata Power, you're getting a large cap at, I would say somewhere between 15 and 17 times 1 year forward earnings, much lower than its historic past. So, that's the way you're looking at it, Tata Power. Similarly for NTPC, the same story, but here you're getting a cub which will get listed sooner than later in NTPC Green as well. Having said that, we're also looking at the players who are going to provide equipment to the power companies, be it Inox Wind and Energy, or be it Sterling and Wilson, which had stellar results which came out. So we are nibbling on to these names, but power for us is a very big, weightage, 15 to 16% in our overall portfolio in ND.
Okay, by the way, look at the market. It's suddenly taken a bit of a knock. We are down 75 points. Remember, we started the show, there was some green on the screen. But there's a lot of volatility on the screen as well today. And the Nifty has again dipped below the 25,000 mark. That's the decline that I'm talking about. So 230 we were in green and suddenly the dip is back on. Among the stocks, there are big losers. Trent stands out on the Nifty. Trent is actually the weakest stock on the Nifty this afternoon, almost a 4% cut. And then you have some auto names like M&M and Hero Moto as well. So that's the market right now. Vinay, hi, good afternoon. Great to have you on. So my question to you is really on consumer and what are you doing? Because there are too many moving parts, right? There are the likes of Trent. They've gone on and created maximum wealth this year. Then you have this whole lab-grown diamonds issue, which has been an overhang of sorts on Titan. You have the snack makers. These are, of course, mid-cap names like Gopal and Pratap, and suddenly they're getting very active. Traditional FMCG companies like Dabur are sounding worried about quick commerce. So there's too much going on in consumer. Are you playing it at all? And if yes, in what way?
So, last year, if you'd asked us the question, the biggest, I think one of the biggest alphas we would have got apart from defense and railways would have come from Trent. We're still holding on to companies like Trent and even Varun. When they correct a bit, we start buying them because the story of Trent is, India's biggest consumption player. And as you're aware, India is 60% all about consumption. Here, Trent is actually increasing its market size altogether, from being, a pure retailer to getting into lab-grown diamonds, as you put it, but, to also be getting into different skewed data as well, as far as people who are their consumers, be it the ultra-rich who could go to a Zara, or people going to a Zudio, or even people going to a Star Bazaar. So that's something why we think Trent, yes, it's corrected today, but if you see its run, it's been super healthy, YTD or in the last year or two. And that's something we will keep on holding on to and even nibbling, if the price corrects. Varun on the other side is, I would say Pepsi's second biggest bottler outside US. And the company is only increasing its footprint. The stock has had some kind of a correction and they're looking at, some kind of fundraise for expansion. History shows us, whenever Varun has raised funds and done some kind of expansion, it's succeeded in improving its utilization rate. So these are the two names we like. Apart from that, you did like food names like Pikaji earlier, but incrementally at the current price, we're not buying them. We're using our incremental money, as I said, more in pharmaceutical, the power sector, or the even if it's in financials, it's in the housing or the insurance part of the space.
You have Bharti within your portfolio, right? You own Bharti. So I'll ask you about this, but all the conversation on social media and otherwise has been about Starlink and what they may or may not be able to do here in India. So we actually decided to investigate a little bit about what exactly does Starlink want to do. Are they really going to be a competition for, incumbents, right? And local telecommunication players like Bharti, Voda, Reliance Jio, etc. And Rima, the short answer is no, right?
The short and the long answer both is no, for two reasons. One, because pricing in India is very cheap, right? Satellite communications, satellite technology is unlikely to be cheap enough to disrupt So that's reason number one.
The terrestrial networks, on which we're running our 5G today.
Exactly.
Okay.
So it's unlikely to be cheaper than that, right? Anything if it has to disrupt in India, it's got to be on pricing. And secondly, it's unlikely to be even as fast as, forget 5G, even 4G.
Okay.
That's what the feedback is. So yeah, you know, it perhaps.
There is, so I was talking to somebody who who's done this on the technical side of things. There's also a technical reason that you can't use satellite tech through mobiles. I mean, you've seen those old
Satellite phones.
Hollywood movies,
receiver.
right? I mean, somebody hiding up in a hill and you got a sat phone. And
Well, they do this
they
to
got to
some
find, they
antennas, I wonder.
got to go somewhere and find the connection, right? I mean, so you got to turn your phone right to wherever
the satellite.
So it's apparently so basically the basic difference I understood is that mobile phones only work at low frequency, whereas the satellite phones will work at very high frequency. That's the basic reason why. I mean, it's incompatible as far as technology is concerned.
So you can't use it to make your regular voice calls.
Yeah.
But you can use it, data will be available. So you will have your WhatsApp, and through WhatsApp you will be able to make your voice calls. But pure regular voice calls that we make, that is not possible with satellite communication. But the use case today, which is what Airtel has also been pitching, that this is complementary to your terrestrial network, which is why they have been asking for it to be administratively allocated. So if what is complementary, wherever terrestrial network cannot reach, which means in the middle of the ocean, on air, or in very remote locations in the middle of the forest, so to help bridge India's digital divide, that's where you want to use satellite communication. So for instance, in the US, when the hurricane, Milton hit Florida, all the terrestrial networks were down, and it's that time when Starlink can be used. It can also be used perhaps by larger corporations as a as a connectivity backup. So that's another, potential use case. But if you want, as Airtel clearly says, if you want to use it for providing, mobile connectivity in urban areas, in metro, to retail consumers like you and me sitting in Mumbai, then you go out there and auction the spectrum. So it depends on the kind of use case.
Yeah, no, absolutely. And of course, the other one is fixed line, but fixed line is not a large user base in that sense. So, but as far as mobile is concerned, I mean, it's basically inefficient. Let's put it that way. I don't know if you have any thoughts. By the way, Starlink is now, I was reading, it's got 7,000 satellites up in the air. That's about 75% of all active satellites. And they want to launch they want to send up another 10, 20,000 satellites more. Any thoughts, Vinay? This is, of course...
You might want to try keeping one in your pocket or in your purse and see the weight of it, and you will start appreciating your mobiles all the more. So
you mean the sat phone? The
sat phone.
Absolutely. So, sometimes we forget the basics, right? The people who've, obviously Bharti and Jio have succeeded so substantially in India because one of the biggest reasons also is the cost of the handsets and the quality of the smartphones which you have. And that's something you should not undermine when you come up with an older technology, which was used, as you rightly said, in remote linkage areas where you cannot put up a wireline or a wireless radio network, and where connectivity is a must. That's where even in India, you would use a SATCOM. But if you want to use it among the masses, you need a big technology change in the costs of the handset, and more importantly, giving you the same features as, let's say, I'm not even talking about an iPhone, or a high-end Android, but even a 3G handset would give you, I think that's leaps and bounds away. So I wouldn't be as concerned of it as far as Bharti is concerned.
Starlink's ARPU apparently is $100. That's what, $8,000, right? Yeah. Oh, I don't know what Bharti is at, or...
$120 is what I read for Starlink. So yeah, 120 must be.
And locally, it would be what?
In India, it's about, Reliance Jio was at 195, 195 rupees. And Bharti is a little bit more at 220, 230.
So there you have it, right?
I mean, the aspiration of Sunil Bharti Mittal is that Airtel should hit 300 rupees, right?
And of course, there's that's just the what you pay to use, but there is also the cost of equipment on which Vinay was talking about. Vinay, thank you for joining us. Good speaking with you. And thank you for being here with us today. Well, let's take